that we can use while we want to actually model a financial statement. You get so now, so let us start first with a tool that, or an analysis called sensitivity analysis. So I'll be looking at how we use scenario analysis, sensitivity analysis, using regression analysis, and using scenario analysis on Excel. So I'll be teaching you very practical things. So I will suggest, if you have a laptop with you, very good. You can try exactly the same thing I will try from here. So I'm going to start with a technique called sensitivity analysis or sensitivity analysis. What do we use it to do? The assumption is that if I actually want to model, now remember, why do people want to model financial statements, financial information? It's so that you can predict the future, so that you can actually do what they call stress testing, so that they can do multiple scenarios of what can be. Wow. So that we can actually look at multiple scenarios of what can be. That is the reason why we are actually using some of these techniques. So when we are doing a sensitivity analysis or this sensitivity analysis, what we are doing is looking at our end result. What is the impact of variables if they change on our net result? For example, we want to have a particular output, profit after tax, profit before tax. When we are considering a sensitivity analysis, we are looking at what could make our results, which is, say, for example, profit after tax, profit before tax, revenue, what could make it to increase or reduce? If those things will increase by particular percentage, what is the impact of that sensitive thing changing on the results? So we use what we call sensitivity analysis. And when you're looking at sensitivity analysis, you can do one variable sensitivity analysis, you can do multiple variable sensitivity analysis. So I can take one variable, make it variable, and every other thing constant. For example, I said that I am only looking at the impact of changes in revenue to profit after tax. However, in real life, there's no way revenue will be the only one that will determine what will happen in profit after tax. There are other variables. For example, for me to get profit after tax, I would have considered revenue, direct income, direct tax, or direct cost, indirect cost, tax, and other expenses. I will consider all that to come up with what I call profit before tax, profit after tax. But when I'm doing a sensitivity analysis, I want to look at one variable sensitivity analysis. I want to look at what will happen to that profit before tax result in a situation where one of the variable is changing. So let us look at a typical example. Let me try to just navigate to an Excel file, and we'll do a real life scenario. Let's assume that I have, say for example, I have, let me just try to make this bigger so that we can see very well. I have gross profit here. Or let's start with our revenue. Let's assume that revenue is 1,200. Let's assume our cost of sales is 500. That means the gross profit we'll have will be equals to revenue minus cost of sales. So this is now our gross profit. Now, let's take this simple scenario. Our result in this case, I need to mute all because of this. Our result in this case that I've looked at here is the gross profit. So let's now assume management has said we want to create scenarios. And let us assume that I've even calculated, okay, somebody raised up your hand, iPhone. You raised up your hand, do you want to see anything? Okay, I think it was an error. Okay, so let's say the gross profit margin will hence be equals to gross profit divided by revenue. That means gross profit margin, for example, in this case is 58.3%. Now, let's now assume that management comes and say, you are the management accountant, you are the financial expert. Create for us multiple scenarios if our revenue will increase. Say, for example, our revenue will increase to, I'm going to create 3 scenarios. First scenario, S1, revenue increased to 1,500. S2, revenue increased to 2,000. S3, revenue increased to 5,000. They now said create multiple scenarios of what will happen to net profit, or sorry, gross profit, if this happens. Now, to determine that, using simple scenario analysis, I could just come, need to mute. I could just come straight away to this place. Right on top here, I put equals to the gross profit in scenario 0. Scenario 0 effectively is saying today. Oh. Scenario 0 is saying today. Help us mute everybody, really, so that the noise does not. Scenario 0, if you have any questions, you can just use the raise hand, what do you call it, logo there, and I will be able to actually call on to us, really. So to create these multiple scenarios of gross profit, I just highlight on this, and I can just do a simple going right here to data. From data, I go to what if analysis, and I go to data table. Then data table will come out to this particular thing, data table dialog box. Now, what I am actually making a change to is on the column, not on the row. So I click on column, and I click on the amount from here, and I click on OK. If you look at it, Excel has calculated it for me. Excel has told me that in a situation where scenario 1, where we have gross profit of 1,500, we are going to, sorry, revenue of 1,500, we are going to make a net profit of 1,000. If we have a revenue of 2,000, we are going to make a gross profit of 1,500. If we get a revenue of 5,000, we are going to make a gross profit of 4,500. So this is the revenue, and this is the gross profit. Now, with this, if any of these things changes, for example, I change it to 50,000, Excel will still calculate what the figure will be for me. So if you put your cursor inside it, it will say table. It is using a tool called data table. I can create multiple scenarios. So this is trying to forecast what gross profit can be using data table, while I am making only one variable changing. Every other variable is constant in this first example. Now, Abimbola, you raised up your hand. You can unmute and ask your question.
Yeah, just a quick one, please. I missed the number you put on the column input cell.
Okay, so I'm going to actually redo it. So thank you very much for your question. So I'm going to just redo it immediately so that we don't waste time. So I'm going to delete all of these things. I've deleted them. I'm going to delete everything and redo it. Yeah? So here, I'm creating scenarios. Please, let's just watch. What are the scenarios? I'm creating multiple options of what could happen. Yeah? So the first scenario I say is SO. SO is meaning in a situation where it is the current one. So I say current one is equal to exactly what we have today. And I press enter. That's how I got it. These other scenarios, I can delete them. I said create gross profit scenario in a situation where scenario 1 is now that we have revenue of 2,000. Scenario 2, we have revenue of 5,000. Scenario 3, we have revenue of 6,000. I just did this. I highlight everything from the top here. And I came to data. I clicked on what if analysis. I click on data table. It opens a data table dialog box. I have row input and I have column input. Inside this column input, now the reason why I will not use row input is because what I want to change, which is revenue, is on the column. And that is why I will use column input. So inside this column input, I need to put what is the figure that is giving us scenario 0. The revenue figure giving us scenario 0 is this in the equation. That is what I click on, and I click on OK. That is all. Excel is the one that did the remaining. So with this, I have created multiple scenarios, and I can have as many scenarios as possible when one of the variable alone is changing. I have only taught you at this point in time one changing variable. Any questions on this? I need to move forward and now look at what about if two variables are changing? In real life, revenue alone is not the one that will change. Okay, so somebody, any questions on this before I proceed? Yes, somebody typed, he said, but you didn't consider costs. Yes, I have only taught one variable. I will teach two variables. I will now teach multiple variable changing. So I will take it step by step. Yeah. So do we understand this? I just need one person to say yes, and I proceed. Do you understand this first one?
Yes, very much.
Yes.
Correct. So
Yes,
I proceed to two. I'm going to use the same thing here. I'm now going to say, what about if the two variables are changing? Two variable changing. What about if the two variables here are changing? How will I do that? Cost and revenue are changing. Please watch. I just come here and I say, I want to create a scenario where costs. Okay, so somebody is asking a question. Are you saying that cost is assumed to be absolute? No, I'm not saying cost is, I'm actually creating different scenarios. So the first scenario, I assume that cost will never change. Second scenario, I'm going to assume that cost will change. I'm just taking it step by step. Yeah. So let's assume that in this other scenario, scenario 1, I have scenario 2, and I have scenario 3. For both cost, or let me say for both revenue and cost. I say scenario 1 is that revenue increase by 10%. Scenario 2, revenue increase by 20%. Scenario 3, revenue increase by 30%. Scenario 1, cost increased by 2%. Cost increased by 3%. And cost reduced by 5%. So meaning scenario 1 is that revenue increased by 10% while cost reduced by 2%. Scenario 2 is that revenue increased by 20% while cost increased by 3%. Scenario 3 is that revenue increased by 30%, cost reduced by 5%. Now, these are the scenarios I want to create. I'm creating scenario 1, scenario 2, scenario 3, but there are two variables that are changing. So let us do it together here. So on this side, I will have all of the costs. On this side, I will have all of the revenue. So here, these are the costs. Remember, the cost at the beginning was 500. So if 500 is increasing by 1%, that means it will be 1 plus this percent, and it is giving me 510. Remember, okay, remember that it was 5 before. Now 500 before is now 510 because it has increased by 2%. The same thing, if it increases by...
Sorry, I think you taught the cost instead of revenue.
Yes, I am doing cost. I'm doing cost first. This is cost. Please, do you understand me? Hello, this is cost. I'm intentionally taught. So this is cost. Let me put it here. This is cost. This is cost, and this is the revenue. So I've not done revenue yet. Yeah, this axis is revenue for me. Okay, so this second cost is this one. And this third cost is this one. I just want to, yeah, so I'm creating only these three scenarios. So these are the costs in my scenarios. Now I'm going to put on this other side the revenue. So I'm assuming that revenue is increasing by 10%, 20%, and 30%. That means the first revenue will be equals to revenue that we had before times 1 plus what I actually have in revenue as the increase. Yeah? So this is the first one. First scenario. Second scenario would then be that this one is equals to 20% over 8, and this one is equals to 30% over 8. So these are the three scenarios I'm creating. However, the two of them needs to be changing, meaning this one is changing and this one is changing. Now I'm going to, all these ones, I'm going to paste them special. I copied and I pasted special. Yeah? Can you see what I've done? So what I want to calculate is what is the gross profit if all of these things are changing. So I put equals to on the apex here. On the apex here, I put equals to, and I go back to the gross profit that was calculated for base, and I put it. That is what I've done here. I now highlight on everything, and I come to data, I come to what if analysis, and I come to data table. Now, when I get to data table, it says row input. Row input, the one on the row here is the cost. So I put row input and I scroll up. Row input is for cost and I click on cost here. Then column input is for revenue and I click on revenue here. And I say, okay, Excel will do the remaining. So what Excel has done for me is that it has told me that when cost of sales is 510 and revenue is 1,320, we are going to get a oh, we need to mute, please, because the noise. So we are going to actually get a gross profit of 810. In a situation where gross profit or revenue increase to 1,440, which is 20% increase, we are going to get all of these figures. Do you understand? So these are the scenarios and these are the results. So Bello, you actually raised up your hand. Please, you can ask your question. You can unmute because you are muted already and ask your question. Hello, you raised up your hand, Bello. You can ask your question. Any questions on this really, apart from Bello? Any questions on this? Do you understand?
Yes, please.
Yes.
Okay, please go ahead and ask your question.
I just wanted to see what you put in the row and column. I missed that bit of it.
Okay, so I'm going to delete everything again. At the minimum, I'll delete all of these ones. So there's nothing here yet. I'm doing it again. So these are the scenarios. This scenario here, cost increased by this and revenue by this. This is what I put here on these two axes. So this one, I just highlight everything here. First thing, data, and I click on what if analysis, and I click on data table. Then it says row input cell. Row input cell, the rows here is the cost. So I go up to this formula and the equation I established before, and I click on the cost. And for the revenue, which is on the column, I click on revenue and I click on OK. The remaining is Excel that put it there. Any questions?
If it's not changing, I'm just trying to see what someone could be doing wrong.
Okay,
if everything populates 700.
You on your own, am I correct?
Correct, yes.
Okay, so that we actually, I'm going to actually get you to, okay, I'm going to get you to share your screen. What's your name on this, please?
It's Abimbola.
Abimbola. So I'm going to make a call so that you can share your screen.
No, I'm actually doing it on my laptop and then following on my phone.
Ah, okay, so I can't, okay, so tell me what you have done then.
Okay, maybe I'll just try to redo again.
Okay.
I'll just try to redo it again.
Okay.
I'm doing it again as we speak.
No problem. If you have any question, you can actually ask afterwards. Any other person with any questions on these two variables? So I've taught you sensitivity analysis using data table for one variable changing and for two variable changing. Any questions?
Sensitivity analysis.
Okay.
You were talking about paste special.
Yes. The variables. Please ask your question. I'm trying to hear you now.
I didn't understand the issue of paste special, what you did with paste special. What did we copy? Where did we paste it?
Okay, so what I did is all of these variables, this was were the variables I calculated. I calculated them as what was there before, like cost that was there before, times 1 plus what the increase we want is. That is what I did before. Now, after doing this, it is a formula. But because what I need to supply in this place must be a figure, I copied it and I pasted it back there as a number. Do you understand me?
Okay.
So that it will,
Okay.
that is all I did.
Okay. Okay.
Can I take it to multiple scenarios now? Hello?
I'm able to share my screen now.
Eh?
Can I share my screen now, please?
You want to share your screen? Okay. Oh, you want to be a co-facilitator? Okay. Oh.
So,
Name myself out. Okay. Okay. So I stopped sharing. Now you can share. Share. Let's just take. Okay. Mr. Apple. Oh, there's noise somewhere. Afolayan, somebody said you are getting a different answer. Not yet. Could you do it again? Okay, I'll do it again, please. I just want who wants to share again? No.
Abimbola.
See, the best thing is to practicalize it.
No
Open
problem.
an Excel. When he's doing it, you do it.
Correct, man.
Oh, to mute.
Okay.
My name is Abimbola.
Yes. Yes, go ahead and actually share your screen, Abimbola.
What makes you?
Can you share your screen? Okay. So let's use yours to. Okay, so you said you are getting 700 everywhere. Now put your cursor on that 700. Okay, you typed it. That's where the error is. Equals to. Now hold on before you even type equals to. Put your cursor on that gross profit you calculated before. Escape. Escape. Put your cursor. Okay, correct. Now put from that 700 that you have inside what you want to do. Put it to where that thing is reading from. Correct. Now do it again. Okay. Are you okay now? Abimbola, are you cool now?
Yes, I am. Sorry, I didn't realize I was muted. I'm fine
Okay.
now. Thank you.
Okay, so you can stop sharing now. Thank you very much. That is how simple it is. Okay, so somebody said I should do it again, so I'm going to do it again one more time so that basically we can all get it. So I'm going to delete everything again. I've deleted it. What I made sure is that I said this 700, it should come as a formula from where I've calculated it before. And I came here, I highlighted everything, and I did data. And from data, I click on what if analysis, and I click on data table. And when I click on data table, it brought out this dialog box. I scrolled up to where I did the current one. And I say row input. On this one, row input means which one is on the row? It is the cost. So I scrolled up, I went to go and click on the cost, which is this one. Then which one is on the column is the revenue, and I click on the revenue and I click on OK. The remaining is Excel that did it. So even if I have multiple very long scenarios, like 20 scenarios, Excel will do it. And I can even be changing it afterwards and say this one is 2,000 and this one is 200. It will give me, it will continue recalculating it. I want to believe you understand with this one. Any questions on this one because I need to proceed? It seems you are very, okay, so I won't be fast. I'm going to take it cool again. Okay, somebody said I got the calculation right. Please, will the video be shared? We have not even, please, can we get the recorded video later? Okay, assume that the video will not be shared. However, the video will be shared, but I assume that it will not be shared first, so that basically you can actually focus. So I have done this again. Any questions? I just want somebody that, is there anybody, okay, that doesn't understand? You can just say, now, let's now assume that I have, it is not only two variables that are changing, more than that number of variables is changing. Let me paint another example here. Let's assume that I have revenue. Revenue was 1,000. Okay, revenue was 10,000. Cost of sales was 2,000. And that means gross profit will be equals to this amount minus this amount. Now, let's now assume that I now have, what do you call it? Employee cost. 1,000. And I have other costs, 200. And now I have total other costs or other costs. I have it as the summation of these ones. And I now have net profit to be equals to gross profit minus total other costs, and I have this as the net profit. Now, management has now come forward and said, in our company, we actually want to know what will happen if many of these things are changing. Let me even make these things to be plentier. I think I have a scenario somewhere. Let me go and use that one so that I don't, it looks more realistic. So I have this example here. Let's use this one together. So I have this example that looks like a normal financial statement. So let us look at, for example, this is like a bank. So I have interest income from loans, interest income from other investment, interest expense from deposit. So this is like a finance house or like a bank. Total of everything is profit after tax here. Now, they now want us to create multiple scenarios where each of these things here, they are changing. Not one, not two. Every one of them is even changing. Let's assume every one of them is changing. What is the first thing I will do? Now, let me just teach you this way. Now, this one, the first thing I will do, let me copy this from here. Let me copy it from here, and I'll go and put it on that other side where I was using. Let me do it from here so that we can see what I've put here. Let me paste. Let me just paste. Now, I'm going to remove all of these ones from other years. Let us assume this is the only one I want to bother myself with, only this one. Now, at this point in time, this thing is telling us that we have, this is each of them. Let me try to make this to be. So I have statement of P&L, and I have interest income, interest, all these are interest income, interest expense, fee and commission, I have other income, I have all of this, and I have profit after tax. Now, let's now assume that we want to create multiple scenarios, and say, let's assume that this is 2020. Yeah, we now want to create multiple scenarios. We want to create scenario one is that there will be a good year. It will be a good year, meaning that all interest income will grow by, scenario one is that all interest income will grow by 80%. All interest expense or all expenses will drop by 20%. Let's assume. Scenario two is that it will be a fairly good year, meaning all this will grow by 50%. All of those expenses will actually even come down by 10%. I'm creating multiple scenarios. Let's assume scenario three is a situation where it will grow by 10% and all of these ones will remain or will grow by 2%. These are the three scenarios I want to create. Now, I'm going to make all of them to be variable. Please watch what I will do. Watch first what I will do. Now, the first thing I will do is that I want this thing to be named. I want to believe you understand all this in Excel. For me to name a cell, you know how to name a cell. Highlight everything. Now, if I come here now, and I highlight everything from here, and I come to formula, and I come to define cell, and I click on create from selection, it will ask me left row, right row, and I say, okay, see what it will do. Whenever I click on any of these things, if you look at this place here, it will be giving me the name that is beside it. What is the good thing with this kind of thing? If I'm on any other cell, like this cell, I can use this thing here to navigate to that place, and it will bring me back here. I don't know whether you understand what I just did. Please, do you understand what I just did?
No.
Okay.
No, I do not.
Can you go over it again?
No problem. To name a cell, the work of naming a cell is actually more than what I want to teach you here. But to name a cell, for example, let me do another example. For example, I have different things here. Book is 2000. And wire is, so to name this cell, I want to name this. If you put your cursor on this thing now, and if you look at this place here, the reference is saying is B10. What about if I don't want it to be B10? I want it to be the name book, meaning this figure will always be book. I will highlight on everything. After highlighting, I come to formula. I click on formula. And I will now see defined name. I come to define name and I click on create from selection. And you will see top row, left row, bottom row, right row. Because the name of the cells I want to create is on the left, I have clicked on left row and I click on OK. The moment I've done that, if I put my cursor on this thing, it will now be calling it book. If I put my cursor on this one, it will be calling it wire. Let us assume that I'm on another cell. This is another sheet. And I come here. This is another sheet. Oh, I come here. And I want to go to that same sheet of wire. I click on it. It will bring me there from anywhere. So that is another use. So for example, if you have a particular line of Excel that you use all the time, you can use naming cell. However, that's not the reason why I actually did it here. Now, I have done it here so that each of these is named as such. Now, taking it a step further. Let's now say I want to create multiple scenarios for this. Please just watch. From here, I will navigate data. From data, I will navigate to what if. Remember, I've taught you what if. I taught you data table, 1 variable, 2 variable. Now, I'm now going to teach you if I want to make all of these things here to be variable, to be changing. I come to scenario manager and I click on it. When I open scenario manager, it will now give me a place and it will say scenarios. Now, I have said we want to create 3 scenarios. Am I correct? Now, so what is the first scenario? Let me call it S1. It has told me what are the changing cells. Changing cells means out of all of these things here, which of them do I want to vary? Which of them will be varied? So I click on every one of them. I said this one. I am clicking on control, this one, this one, this one, this one, this one, all of the cells that can change. I am clicking on them one by one. This one, this one, this one. These are all the cells that can change. And I have clicked on them. I press control down and I clicked on each of them one by one. And I said, okay. The moment I said, please go ahead. Hello? Are you talking to me, please? I don't think you're talking to me.
Continue, sir.
Okay.
I can't put scenario on my own data.
You can't find scenario. It's there.
Yeah.
It's there. Just click on data. When you see data,
Okay.
you will now see what if. Click on that what if analysis. Then you will see scenario.
Okay.
So the moment I've done this thing now brought for me, it brought out all of the ones that I say I want to vary. Can you see? It brought all of them. Interest, income from revenue. It brought them all out. Now, I said, this thing I want to do, that I said, the first one is that, this first one, the first scenario is that it will be increased by 80%. That means that it will become equals to that times 1.8. I said that all the income will increase by 1.8. all the revenue, it will increase by only, let's say 10%. So this is 1.1. Yeah, let us assume that is what will change. This one will be times 1.1. And I say, okay. Okay. Now I have created scenario 1 already. I said I want to create three scenarios. So I click on another add and I say scenario 2. What is scenario 2? I say scenario 2 is that this thing will increase by 50%, fear 1.5. This one will increase by 50%, 1.5. This one, it will increase by only 2%, equals to times 1.02. Yeah, let's assume that some other things will increase too. Let's assume that it's personnel cost. Personnel cost will now be times 1.01. Let us assume that's the scenario 2. And I say, okay, this is scenario 2. Let's assume another third scenario. A third scenario, let's assume that it will be that this one, the interest income will increase by 2, meaning it will double. Interest expense will reduce by 20%, meaning it will be 0.8%, and I click on OK. When I'm done creating all the scenarios, now I've created scenario 1, scenario 2, scenario 3. I can just come here and now click on summary. When I click on summary, it will ask me, do I want a summary, a scenario summary, or do I want a scenario pivot report? Let me start with scenario summary for you. I click on scenario summary. Now you will see how good the summary will be. Then it will say, what are the results? So after changing all of these things I've asked you to change, what are you interested in? I say I'm interested in what the impact will be on net income. Now I'm clicking on this net income. Net income and profit before tax. Let me just remove all of this. I said I'm interested in net income, profit before, let me look, profit after tax. Please, can you see what I'm doing? Hello?
Hello.
Yes, I'm interested in net income, comma.
Oh, you are choosing net fees and commission, please.
Yes, I'm interested in that. Anything you are interested in seeing as your result.
But you didn't choose net income.
Okay, sorry. Net income I've chosen, comma.
Mm-hmm.
I'm interested in net fees and commission, comma.
Commission
I'm
income.
interested in
Net operating income.
profit before tax and profit after tax. Let us assume those are the things I'm interested in. And I'll click on OK. So it will now go and do the calculation. Any questions on everything that we have done? So this is the report. Can you see the report?
Scenario summary.
Correct. So this thing is telling me that in scenario 1, interest from loan will increase to 3060. And the output of that is that profit before tax will become 1544. Scenario 2, these are the amounts it will be. And the net output, what it has put here, meaning profit after tax. Profit before tax was 44 before. It is now in scenario 1, it will be 1544. In scenario 2, it will be 1019. In scenario 3, it will be 1904. I have altered all of them one by one. So I can vary all of the variables and get to the outputs that I require. Any questions? Any questions?
Sorry, sir, if you won't be asking for too much, it will be good to have an opportunity of possibly listening to this on our own again to get it quite all right, so that we don't bog you down asking so many questions.
Okay, no problem. I know. If you have any questions, the sincere truth is that we actually have a full class. This is just a class to just do one of the. We're actually having a full class let me see the date for the class. See, I'm actually teaching you with slides, though, and they will send the slides to you, really. They will send it to everybody. It's free. There's no problem. Everything that I'm teaching you, they will send you these slides. So it will guide you to do what you want to do. Yeah? And they will also send you the video.
Thank you. We appreciate that.
Yeah, they will send you everything, don't worry. And I know that there's a full class for this on the 20th. So no problem. You can also join in for that. So this is just like a snippet. And this is how you calculate for multiple scenarios. Do you understand, or do you want me to do it one more time so that I can? Do you want me to do it one more time, please? I need your.
I think we can move forward.
Okay. So this is the way you actually use. So I've taught one. Okay. I've taught one variable changing, two variables changing, all variables changing, and that is how you calculate this. Now let's now go a little step further. Now, like I said, I've taught all of this. Let's now talk about what do you do when you are actually trying to model a financial statement? When you are trying to model a financial information. And the reason why I taught all of those techniques before, I'm not even finished. I think I'm supposed to teach one more technique. Let me teach you one more technique. So let's teach one more technique. Now, let's assume that I actually have. I think I need to mute off. Okay, so let's assume that I actually have. Let's assume that I actually have even another scenario. Let's assume that I have financial statement from prior periods. Let me use this assumption. Now, in this assumption here, these are financial information. Let me copy them to this side so that we can use them together. Let me just copy them anywhere here and copy them here. Now, what I have inside this information here is the performance of the bank over 4 years. Now, when we are doing modeling, you always need to look at the impact of the relationship of the past to know the pattern of growth and the pattern of the relationships in your data. Data themselves don't, for example, if you mix, every time you mix yellow and blue together, it will give you green. That's what they taught us. However, whether it will give another color now, I don't know. However, whenever you mix it, it is supposed to give you a particular color. How do they know that? Why? Because in the past, it has been mixed and it gave a particular color. So historical data gives us information about the characteristic of data. So in this example here, now what I've been showing you, I want to show you another technique. I have 3 years data or 4 years data. So if I have 4 years data and they ask me to come and project what will happen next year, what will I do? I need to actually simulate what has happened in the past. First, it's actually a rule of modeling. You must understand historic data and the characteristic of historic data before you can project the future. So let's assume that we want to project the next year. How do I understand this data? First thing, number one, I have interest income here. I have loan. Now, if you understand this data, you know that, okay, let me even ask, what are the interest income is a function of what? If we are going to write it as an equation, what determines interest income? I want somebody to answer me, please. What determines interest income?
Loan giving.
Loan giving and what?
Rates.
And
Correct. Okay. Now, so
interest rates.
yeah, very correct. So the two of them, loan amount and the interest rate, that means interest.
The interest rate.
Yeah, very correct. Yeah, very correct. So if we know that loan amount and interest rate determines interest income, that means we need to actually look at the relationship between interest income and loan amount, loan balance. There's a relationship between the two of them. If you give more loan, you will have more interest income. If If you give less loan, you will have less interest income. So there's a relationship. Now, we want to establish a line for that relationship. Why are we establishing a line? If you have been able to draw a line, the line is the characteristic of the distribution. So that line, just watch me, it's very simple. I just come here and I want to draw a line. Now, on Excel, I know that for some of us, you probably did some little linear regression in the university. Just simple linear regression. What is the function? The assumption is that interest income, I'll call interest income, is a function of loan amount and interest rate. So if that is what we are trying to mimic, then we can draw a line, a regression line. See, watch what I will do so that it will help to determine this. Now, if I come here, please watch. I come to data, and under data, I have data analysis on my own. Data analysis. Click on data analysis. When I click on data analysis, this data analysis tool comes out. I want to establish a relationship between loan amount and interest rate. Because I know that if I've been able to draw that line, if I want to project the future, I will just substitute that equation. Let me draw the equation for you first. I don't want to make it. So let me draw the equation first. It is that interest rate or interest income is equals to coefficient plus C1 times L1 plus C2 times L2. Now, there's no English magic inside what I'm saying here. All I'm saying is that interest income will flow. This C1 here is coefficient. C2 here is coefficient. L1 here is the loan. The only thing I have here is loan. So let me remove the other one. So L1 here is the loan amount. Interest income, you know. What we don't know is CO and C1. CO and C1 is the slope. This C1 here is the slope. CO here is the intercept. And Excel will help us to do that. I don't need to bother my head. Excel can do that one. So I just come here to, like I said, I come here. Let me go back and actually come back. I come here on this Excel, just watch, and I click on data, and I click on data analysis. The moment I click on data analysis, it shows me this thing, and I go to regression. Regression is R. I click on R and I click on OK. This thing will come out for me. I want to project 2020 interest income new. So watch as I will actually project. I will project 2020. I will project 2020. I can project as much as I want. So the line is the first thing I want to draw. So I come here and I say, what is Y? Y is your dependent variable. Inside this equation I've done, Y is interest income. Loan is the independent variable because interest income is dependent on loan. So interest income will increase if the loan that you are giving out is increasing. Revenue will increase if you sell more market. So inside that revenue and sell more market, the independent variable is sell market. The dependent variable is revenue. So here I say Y is all of this one that I have inside interest income. And I say X is all of this one that I actually have is my Y is the dependent variable. My X is the independent variable. So my X here is the loan amount. And when I'm done with that, I can do it with the logo, with the labels. So let me highlight from the top, interest income, and I highlight from the top here, loan amount. And I put label, output. I want the output to come out right here, the ANOVA table. I want my ANOVA table to be right here. And I click on OK. Excel will give me the ANOVA table. See, this is the ANOVA table. I know that this is the ANOVA table he gave me. It's telling me that the regression line is 96%, meaning that the correlation of coefficient is 96%. And it's telling me the R square is 92%. That means that this is almost a perfect relationship, meaning as interest income is increasing, loan amount is increasing. There's a perfect relationship, a positive relationship. That is what it has given to me here. And it is giving me more statistics that you don't need. Now, I want to now project what it will be in 2020. So if I want to project 2020, that means I first need to give them loan amount. Loan amount is the one that will be changing. So I want to project 2020 to 2025. Let us assume 2020 to 2024. Let me try to make this bigger so that you can see. Now to project that, from here, the loan amount has always been like this. So if the loan amount is like this, please watch. If you see, our loan balance has always been increasing, except from the last year here. So we can do an average growth. What is the average growth? So between this year minus this year, our loan balance increased by what? It increased by this percentage. Let me just put this in a bracket so that it can give me the correct figure. So this thing increased by 99% and on till the end here. So the moment I've actually calculated this, let me just put a percentage sign. So it means that on the average, this is the growth rate in loan amount. So that means the average of the growth rate in this loan amount is our growth rate in the period. The average growth rate is 20%. So that means that year on year, the assumption is that if the business will continue in the same way, we can use the average growth rate of 20%. So I say the amount that we have in 2019, which is 16,920 times 1 plus the average growth rate. And I'm making that absolute so that when I drag it, I'm making that absolute F4 and I close the bracket. So it's telling me that this one is going to become this amount in 2020, loan amount. This is the loan amount in this year. So that means there will be a growth rate. This one in 2021 will now be this times 1 plus the growth rate, which I am making absolute. I'm assuming it continues to grow at that level. So this is now what it will be for each of the other years. Then what will now be the interest income in those years? Interest income in those years. Remember, when I was drawing this equation, I said interest income equals to coefficient, intercept plus coefficient times the loan amount. So this is the intercept, and this is the coefficient. Intercept, coefficient. Intercept, coefficient. So I just come here and I say equals to what I have as the coefficient. What is the coefficient here? The coefficient here is exactly, sorry, intercept here, CO. This is the intercept, this one. Plus, remember the function. This is the formula I'm using. In bracket of coefficient times loan amount. So I put coefficient for loan times the loan amount that I have in that year, and I close the bracket. Now, because these ones, CO and C1 are these ones, I don't want them to change when I drag it down. I make it absolute. H25 and H24, and I drag it down. This is telling me that interest income will be exactly this in this year. Interest income will be all of this figure in 2020, 2021, 2022, 2023, and 2024. I have used regression analysis. Any questions? Now, this same regression, I can actually use it to do a projected budgeted financial statement. Any question? If you have any question, please ask at this point, because my time is almost up in this free class. Any questions, please?
Can I ask a question?
Fire.
Sorry, so I just wanted you to put your cursor on B12.
B12.
Yes, please.
Okay. Any other questions? I think I've answered that one already.
Can we go over it one more time?
Okay. So
Thank
I'm
you.
going somewhere because I will delete everything. Should I delete everything and start again? Don't say yes. Don't worry.
Yeah.
Okay, I delete
Yeah,
everything.
yes.
It is in some of us, they taught us this regression. No. However, I don't know. Okay. So I said, what I did here was that I calculated the growth rate, average growth rate. To calculate average growth rate, okay, I just want to read the chart from somebody so that basically I can get what we want. Can't see the chart coming out. Okay, I'm trying to get your chart. Sir, how I may get the absolute key? Absolute key is F4, F4, F4. Is F4. Absolute key is F4. Okay, Olufade, you raised up your hand. Please ask your question so that I'll know whether I'll be able to. I would have answered it if I am doing it again.
Okay, thank you very much. So my question is, instead of what's the difference between doing this growth rates and using CAGR? What's the difference?
And using what?
CAGR.
Okay.
Compound.
I will explain. I will explain. Now, so the reason, remember that some of these things are not compounding. When you do a compound rate, so for example, let me show you, though it's not part of this class I'm teaching, if I want to show you the difference between simple and compound. If I have a compound rate, that means after the first year or after the first period, the principal and the interest will be the principal in the next period. Please, do you understand what I just said?
Yes.
So that is when you are compounding. See, each year financial statement or each year financial detail does not have a direct impact on each other. For example, I gave a loan to somebody for 2 months. After he finished paying, it doesn't mean another person will come and collect exactly that amount of money with another interest on it. Because after the first loan, he would have finished paying it. So it's not rolling over. Please, do you understand what I just said? Did you get what I just said? That is why that's why I'm using a simple interest rate, a simple compound rate. Okay. So I assume that I've answered the question. I want to just do exactly what you said I should do again. So I'm going to redo it. Now I want to draw the line. What is the line? I want to draw the regression line. Very simple. Like I said, is the relationship between interest rate or interest income and loan balance. There's a relationship. Is that if you give more loan, you get more interest. So because we have historic data, I need to draw the relationship line between them. And the relationship line is drawn as such. I just come here to data. Excel is the one that is doing it. I'm not doing anything. I click on data analysis and I click on regression. I click on OK. It will bring out this thing. So I say my Y input is the dependent variable. What is dependent here is the interest income. So I come here and I highlight on all the interest income. I highlight on everything. The X is the independent variable. The independent variable in my equation here is loan balance. I highlight on it. And I'm clicking label. Why? Because I highlighted label when I was doing it. Then I come here. Where should it give me the output? I selected on G8 and I just click on OK. It's Excel that did the remaining. And so that you know this thing is a rich relationship, it's telling me that the multiple R, which is the correlation, Pearson's correlation coefficient. You know this already. This Pearson correlation coefficient is saying that what is the relationship between them? Is a positive relationship. It means that 96% accuracy, meaning the error inside that thing is 4%. That is how accurate the data is. So if that is the case, it has given me the intercept and the loan balance, or the coefficient for the loan, intercept coefficient. So I come here. Remember, all I'm going to do in subsequent period is that I will substitute coefficient, loan balance, and the and the coefficient for the loan balance. CO plus C1 times CL1. That is what I'm using to calculate interest income. So I'm substituting. So I put equals to intercept. I click on it. Plus, open bracket, coefficient 1 times loan 1. Coefficient 1 is the coefficient for loan times the loan balance in that new year that we are forecasting. I close the bracket and I am making H24 and H25 so that when I drag it down, it doesn't change. I make it absolute by clicking F4 on my system, and I click enter and I drag it down. That is the way I calculate the interest income. I've forecasted interest income till 2024. Now, with this question, with this, any questions? I think I just have any questions. We are going to send you the video. Akim Ayola Rahim, you have a question? Just hold on to your question for a couple of minutes. My colleague just wants to say something. Really, just put all the questions together. Put all the questions together. My colleague wants to say something. I think we actually have a full class for financial statement analysis and modeling coming up on the 20th and 21st. I think I've actually overspent my time because it's actually a 1 hour free class. So my colleague wants to say something, really. Let me just allow her to say something. I'll just come back and answer your question. Hello? Any questions for me? Okay, so somebody raised up. You raised up your hand before, so any questions on that?
Yeah, good afternoon, sir.
Good afternoon, sir.
I said, how do you get that relationship, that interest income equals to CO plus C1, that function here, this function? How do you get the function?
It's regression. I did it again just now. Should I do it again?
Oh.
Okay, I'll do it for the last time.
No, what I'm saying is, how do you come about the function? The interest income equals to C0 plus C1 times L1.
It's the regression function now.
Okay.
It's the normal regression line is the relationship between variables.
Okay.
That's what the regression line is, the relationship between variables. So that is the Pearson's correlation coefficient. Don't worry, they taught you.
Sorry, sir, another question, sir. Okay, does not relate to this our workshop. I actually registered for advanced financial reporting class.
Okay, when?
When is it coming up? They said they've shifted it.
Okay, so we do many of. Okay, so I do us a favor. Just send an email to info@godp.co.uk. They will send you the next one for financial reporting.
Okay.
Yeah, just send it to info@godp.co.uk. This particular training is actually a free one. This is just 2% of what we'll be doing at the financial statement analysis and modeling course coming up on the 20th and the 21st of this month. 20th to 21st of this month. That is when the training is coming up. We are going to send everybody the training slides and also the video for this training. And in the body of the mail, there will also be a link to register for the full course. It's a 2-day course. It's far more exhaustive than anything that we have done, but we have only done 2% of what we'll be doing in that class. I would recommend that every one of us join that class on the 20th to 21st of this month.
How much is it, please?
How much is it? I think it is. I think it is 45K if I'm not
Free
mistaken.
of charge.
Somebody said free of charge. I like that. Ready? It is well, sir. However, I have faith. You have
Does
faith.
does
Can
it
you repeat the amount
this
again?
can still apply?
You can apply. Please go
The
online.
discount.
Okay, so I was told.
I said the discount. You know.
Okay, you said is there a discount?
I
was told. You know what? Just send
yes.
info at godp.co.uk. They will, but register online and they will get back to you.
Okay.
So
okay.
So thank you very much. I want to believe you have learned something very small. It's 2% out of the remaining. For the remaining 98%, meet me on the 20th and 22nd and 21st of this month. And if you actually want to call any number, let me just put a number you can call. I think you can call this number 08060126972. And they will get back to you. I.e., they will
Is the
just
number again?
6012 6972. 6012 6972. You can send that, and they will send a mail to everybody. So, and if you want them to call you, you can also send a mail. Thank you very much. I want to believe that you have had a wonderful time. I've had a wonderful time. I believe you've actually enjoyed it. Thank you, have fun. They will send the link to the video and also the what do you call it? What do you call this? The slides. It is free. That one is free. But the other one, the 98% that is not free. Okay, thank you very much. I appreciate you. See you next time.
Right, thank you, sir.
The time.
Yeah, thank you, sir.
And the link to the training has been dropped. The link to the training has been sent to you by chat. You can click on it. The link to the training has been sent to you by chat. You can click on it. Yeah. Thank you. Have fun.